Yesterday, the euro and the British pound gained upside momentum. Supported by relatively upbeat data from the euro area, the European currency regained some ground in early trade after falling the day before. Weak data on US GDP growth fueled its rally. Gross domestic product rose at a 1.3% annualized rate in the first 3 months of the year, below the previous estimate of 1.6%. The British pound also recouped losses. However, bulls failed to win back full control of the market. US jobs data turned out to be mixed, which did not have a strong impact on market sentiment. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It is full of reports from Eurozone member states, including German retail sales, GDP growth rates for France and Italy, as well as Eurozone inflation data. The Consumer Price Index is estimated to have increased by 2.5% in May, with core inflation easing to 2.7%. If inflation figures are in line with consensus estimates, the European Central Bank is likely to announce an interest rate cut at its upcoming meeting next week. Such a decision could weigh on the euro. In the medium term, however, it is expected to support the economy and boost the risky assets. Speaking of US statistics, all eyes will be on the core PCE price index that first preferred gauge to measure inflation. The indicator is forecast to rise to 2.8% in April after increasing the same amount in March. On a monthly basis, the core PCE price index is expected to remain unchanged at 0.2%. A decline in the indicator will put pressure on the greenback and back up the risky assets. Traders should also take notice of data on US personal income and spending. From a technical perspective, the 1-hour EUR USD chart shows that it's worth focusing on the levels of 1.0810 and 1.0789. A decline followed by a false breakout at 1.0810 will generate a buy signal, pushing the euro up to 1.0834. In case of positive statistics from the euro area, the price will have a chance to break above this level and test it for the top down, with the euro climbing to 1.0858 and 1.0888. At the level of 1.0888, I recommend going short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0834 and 1.0858 can only be considered on a false breakout. Alternatively, if the price breaks below 1.0810, the volume of short positions will increase, dragging the euro down to 1.0789 and probably 0.769. Much will depend on US data. At the level of 1.0769, it would be wise to go long on the rebound, expecting a 15-20 pip move. Going long at 1.0789 and 0.810 will only be relevant in the event of a false breakout. As for the British pound, a false breakout at 1.2706 will generate a buy signal, driving sterling up to 1.2742. If the price breaks above this level and tested from the top down, the pound sterling will extend gains to 1.2769 and even 27.96. At the mark of 27.96, traders are advised to go short on a rebound, counting a 25-30 pip decline. Short positions at 27.42 and 27.69 can only be opened on a false breakout. In a bear case scenario, if the price breaks below 1.2706, the British currency is likely to dip to 1.2681 and 26.46. In this area, it would be a wise decision to buy the pair on the rebound to catch an intraday correction of 25-30 pips. Good luck and have a nice weekend.